then multi-asset allocation fund can be a better segue to look at it. So if you look at the multi-asset allocation fund here, which is highlighted in gray, it falls somewhere in between equity and other asset classes. Over here, we have taken a period of 20 years. And in the last 20 years, if you notice, there has never been a single asset class who's turned out to be a winner. The top line is the best ranking asset class, and in that you'll see the roles keep changing, the ranks keep shifting, but multi-asset definitely stays somewhere in between these asset classes over the last 20 years. Hence, if you're looking to find an investment opportunity where you want to have returns which are slightly higher than debt, but risk is not as high as that of equity, multi-asset allocation fund could be a way to look at it. Over here, we've plotted our quantum multi-asset allocation fund of funds, historical returns and risk. So for the 2-year rolling return basis, the average 2-year rolling return for the last 10 years of history of this fund has been around 10%. And the standard deviation for this period on an average has been less than 6%, barring the COVID period where we saw some standard deviation inching higher. Over here, we've highlighted another important fact about the quantum multi-asset fund of fund. That being if you just look at the first row there, instances of negative return for multi-asset fund of fund has been zero. Over its history of the last 10 years, this fund has never delivered zero returns. But that for the entire category as well as for equity and gold has been much higher. And if you just look at the instances where standard deviation has been less than 6%, there we top the charts with 79% of the times we've had standard deviation which is less than 6%. So like I said, if the idea is to supplement equity returns or diversify within the equity asset class, REITs and InvITs may turn out to be a good alternative. But if you're purely looking for asset diversification, risk diversification, then REITs and InvITs may not be the optimal option because they tend to behave just like equity. They do not have negative correlation with the market cycles, and hence they tend to be not so fruitful in terms of being a diversifying asset.
So yes, so just an equity outlook. So we thought we'll also append our presentation with what our outlook is. So currently we are still, if you see the headline index Nifty and Sensex, they're still below their long-term averages to the tune of 10%. And last 1 year returns also have been dismal. And 2-3 events which are happening in the backdrop are the West Asia tensions are continuing. And we were expecting that the crude oil should soften, which it had. But again, the recent skirmishes are causing some volatility on that side. And we again remain vulnerable. So that is why the equity markets have also, the headline index remains a little volatile.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.